Good morning all and welcome to another one of my videos. So I have the same pairs on watch today, and those are sugar USD and pound dollar. And I was just thinking a moment ago, if you watch my videos regularly and you find them a little bit repetitive, well, that's a good thing. The way I look at it is, if I'm trading a £1 million account, if I'm scaling my trading account and it's getting bigger and bigger, as it gets bigger and bigger, do I want to be trading differently each morning? Do I want to be trading different rules, different variables as my account gets bigger? To me, that would be very, very stressful. What I'd like to be doing as my trading account gets bigger and bigger, I'd like to be trading in a repetitive, almost robotic-like way, if possible, as robotic as possible. Obviously, there's always variables in the market that we have to take into consideration, but I want to be trading that we have to make a judgment call on, rather, but I want to be trading in as replicatable way as possible, where I know what I'm doing, where it's just repeat the same thing over and over again. If you look at sports people, when they warm up for a sporting event, what do? They just do the basics. They do it over and over again. The same thing if you watch tennis players, they just practice hitting the ball over the net. There's nothing complicated about it. They're not really doing too much. They're just repeating the same thing over and over again. So, the more we repeat the same thing over and over again, the better we get at it, and the better we get at the basics. And that's all I'm doing, is I'm just repeating the basics over and over again, trying to ingrain it in my own mind and hopefully ingrain these things in your minds as well, so that once it sticks in your subconscious, it's there to stay. So with that in mind, I'm going to break these pairs down for you now. So I've just put this. This isn't really necessary. If you've been watching my videos regularly, you will see that I didn't have this structure on before. It's not really necessary because we have more than enough to work with by way of this weekly double top here and the structure that's in here that I will break down for you as we drill down to the daily chart and the lower time frames. But we do have, I'm just going to, because there's even more confluence factors. There's so many confluence factors about this pair that there's even more within this structure as well. Okay, so I'm just going to break them down for you now to show you how replicatable the way that we trade is, and how the patterns that repeat themselves, how replicatable they are as well. So we have this 1, 2, 3 touch structure. Notice how the points line up perfectly. We then have that kind of scoop double top, which we sometimes see at the completion of the structure. So why is this a completed structure? Well, we have this 1, 2, 3, and within that, we have this 1, 2, 3 middle section, which breaks below this low here. Okay, that when we have a 1, 2, 3 within a 1, 2, 3, that gives me a clue that this is a completed structure. However, sometimes I've talked about how we get a scoop double top like that before we go, okay, before we move to the downside. Also, if you just measure, I've been telling you about this, if you just measure, sometimes if we measure the middle section, so what I'm doing here is I'm measuring the depth. You've seen me do this on multiple time frames. So if we assume that the depth is, okay, here, so what I'm doing here is, if we measure from the base of the middle section to the break of the middle section, okay, we measured that there. You can see that that clearly doesn't line up with here. But another thing that we do is, if we assume that we have an impulse correction continuation within each sequence, within each pattern, if we measure this impulse here and we measure this from the break of the middle section, that lines up almost perfectly with where price rejected from and where it's stalling once again. So often we have these impulse correction continuations, and we don't just measure the impulses from the break, we measure them from the break of the correction as well, because often the volume that's built up within this middle section, which also has a 1, 2, 3 middle section within it, see that? We have this 1, 2, 3, which breaks below. We have a middle section within the middle section itself, which then breaks out, and then we reject from that area there. So this is just how we measure structure. I just get that off the chart. So then what happens? So we come back up for that scoop double top, and if I just move that over slightly, do what I did yesterday, Repeat the same thing over and over again. You can see that we came back up to this double top area. I've talked about how on the higher time frames we typically break above structure before pushing to the downside, because people who believe what was previously resistance becomes support once it's broken above start buying this when the media start putting out stories such as sugar USD at 6 or 7 month high. Okay, I've also talked about how these green wicks, these bullish wicks tend to get filled, particularly when we haven't broken above a weekly double top like this. So we come up, we tap into it, but we don't break above. We also do so by way of a bullish wick. We come back up again, we don't break above. We also get there by way of a bullish wick, implying that these bullish wicks will likely get filled. We do break above this time, but we do so by way of another bullish wick. But then we get that kind of premature hanging man candle there. So these candles, when we get these low tests at an area of value, some people might look at this and think, oh, it's going long. But when we get these kind of low tests at an high area of value for a sell, then that is more likely that the price will sell off. But notice that we hadn't quite filled that wick yet, the bullish wick. So it's likely that we will still fill that. We do tap into that. And as I said yesterday, now we have our first red candle, which has broken, not just broken above here, but broken above the previous green wick, implying if this was to close like this tomorrow, given that it's Thursday as I speak, if it was to close anywhere like this tomorrow, we could likely see a move down to the downside, okay? So just analysing the mechanics of the market, I talked about previously how if we just analyse the sections, I didn't analyse this yesterday, but if we just assume that this is an impulse correction continuation, we measure that to there, and we measure that to the break of this little structure here. That takes us down to there, giving me a clue that that is a completed move. 1, 2, 3. Okay, if we just measure this structure here, so now I'm measuring this impulse correction continuation. What I'm trying to do is I'm trying to determine where these moves have finished, because what the problem is a lot of the time is that people do get in at high areas of value for a sell or a buy, but they're not measuring, or they're not aware of the, where a previous move is potentially, whether it's potentially finished or not, meaning that although something like this might be a high area of value for a sell, if a previous move hasn't yet completed, then it may pop higher before it actually pops back down, if you see what I mean. So meaning that you're therefore getting in too early. So if we measure this move, so this impulse correction continuation, that only takes us up to here, but if we measure it from the break of the structure as well, so now I'm measuring it from the break of this structure here, which has 3 sections, 1, 2, 3, and a clearly identifiable middle section where the lengths are of a similar, the impulses are of a similar length. That takes us up to here, implying that this impulse correction continuation has likely finished if it rejects from this area, and you can see it has rejected from that area. So if we just take that off, so then I'm looking at, you do have that kind of, we do have that kind of impulse correction continuation. So we have a impulse correction continuation with a 1, 2, 3 middle section where the impulses are a similar length. That also implies that this move will likely finish in this area. So if you have lots of moves all finishing in the same area, which happens to be a high area of value for a sell, where we would expect the buyers to be getting out of their positions, a high such as this, that implies a move to the downside from that area, okay? Hopefully that makes sense. You can see that we've filled, even on the daily, we've filled all these bullish wicks, all these green wicks, and then you see that momentum coming in now. If I just drill down a little bit further, what do we have here? We have a little reversal structure at an area of value for a sell. So that also implies potential sell. So what do I mean by that? Well, we have an impulse correction continuation. Let's measure the legs. That takes us up to here where price rejected as well. And you can see that we have a middle section within that. We have a 1, 2, 3, where the lengths, the impulses within that middle section are of a similar length. And then we kind of have that 1, 2, 3 last leg where the impulses are of a similar length, also implying a move to the downside. So that's one of the reasons that this is higher up on my watch list, because there's just, from a mathematical point of view, there's so much about this trade which implies a sell. Okay, so we're just stacking the confluence factors as traders. So you can see now we have that impulse, correction, continuation. But notice if I drill down to the 15-minute chart, so I talked yesterday about why I didn't get in here. We were trading into these lows, and because I couldn't find a middle section within this piece of structure, I was under the impression that this might be the middle section, which breaks below that low, below the base of this structure, pushes up and gives us what we call an ending structure before the move to the downside. So one of the things I always remind myself is, if I can't find a truly identifiable middle section, which I couldn't in here, that you're probably trading in the middle section. Okay, so which would make this a higher risk trade. We then push down. I couldn't get involved in any particular trades. I was looking at this entry here, but it was a bit disproportionate relative to the move down. I'm always looking at the proportions. It's also the third correction in, which my rules tell me that I can't get short on the break of a flag such as this if it's the third correction in. So, and the reason for that is because if you do get short on the break of the third correction in, usually price will do what it's done here. Okay, so we'll end up with a larger flag. So if you get short on the break of a flag such as this, you'll be tagged in, and price does something like this and forms a larger correction. Okay, and one of the clues for me, this is where it really helps to really understand price action. If we just drill down to the 5-minute chart and analyze this structure, one, we have a little hook point set above it, but see this structure here? So we have this 1, 2, 3, but it doesn't have a middle section. I've noticed from my testing that when we don't have a middle section, typically we break the flag and then push back up and then form something deeper. So with that in mind, and with the time running out a little bit because I've gabbled on as I usually do. So what I'll be looking for is the following, right? And the reason for this, one, this correction is quite steep. When we get a steep correction like that, that usually implies that we get something like this, and then we push back up and then form a flatter version of that steep structure. And one of the things that makes me think that is because we have a 1, 2, 3. I'm just measuring this quickly, but we have a 1, 2, 3 where the lengths or impulses are of a similar length. What does that imply? That 1, 2, 3 is likely completed. Where did it complete? It completed at a low. Why is that significant? Because if it completed at a low, that likely means that we'll push back up to tap into this area, because we near missed to it. I talk about near misses. We near missed to this high here by way of a 1, 2, 3, where the impulses were of a similar length, which implies that it's completed down here and we'll likely push up. And if we do, okay, if we do push back up to fill the high that we near missed to, then I'll be looking for a pushback down on the flag, because there's no structure to this, and it probably wouldn't be by the end of the day. The opening hours on sugar are a little bit different. If we tapped into the area, I'll be looking for a push down and a flag, and then I'll be looking to get short on the break of the flag, and I'd be able to manage that most likely down to here very easily. And then, of course, if the higher time frame kicks in, you can see just down to the bottom of that structure, we've got 10%, and then there's much more profit potential to the downside. So that is Sugar USD. I'm going to speed up now because I've talked a bit too long about this pair. But anyway, Sugar USD, that's what I'm going to be looking for. Pound dollar on the higher time frames, I'm going to speed up ever so slightly because I've only got 6 minutes left. Why am I looking at pound dollar? Pound dollar on the higher time frames, we have this 1, 2, 3, 1, 2, 3 touch structure with a 1, 2, 3 middle section, and we also have a near miss. So we near missed here to this previous high, implying that we'll likely fill that high that we near missed to, because we near missed to it last time around. What happened here? You might be thinking, what's this? This is people getting caught the wrong side of the market, who believe what was previously support becomes resistance, because the media would have put out, and in fact, I actually remember this, the media did put out scare signals about pound dollar being at a 3-year low at the time. Their so-called experts were saying that they thought this was just going to keep going to the downside. I was looking at it because I'd seen that 1, 2, 3 touch structure with a 1, 2, 3 middle section and the near miss to there. I was looking at it as people getting caught the wrong side of the market, and that we'd likely smash back to the upside aggressively, and that's exactly what happened. Okay, we then have that impulse correction potential continuation to the upside. Okay, and if we just measure that, you'll probably find that if we measure it from there and we measure it from the break of the correction, that takes us up to there. What a coincidence. Okay, you can notice we've scooped back down. You might think, well, why are we coming all the way back down? Well, if we just analyze that, let's find out why we're coming back down. And because we're coming back down, we could potentially capitalize on a short-term move to the downside, a kind of counter trend move, because price has no reason to come all the way back down to here. We have this 1, 2, 3 touch structure here. Okay, you would be able to see this on the lower time frames, a 1, 2, 3 move within there. We even have a 1, 2, 3 last leg there, just to touch on it with a 1, 2, 3 move there. Okay, we tap into that area. So price has no business necessarily coming all the way back down to there, because that is a completed piece of structure. But what price left us with is a footprint. Okay, so what do I mean by that? Well, we have a little footprint here with the sharp move down followed by a sharp move up, implying that there's a lot of liquidity there. Often the sharpness it indicates how much liquidity there. It just so happens to be the break and retest of this piece of structure here. So we have that 1, 2, 3. We break out of that, we come back down, retest it, and then go long. So this is also not just a sharp hook point, but it's an area of significance that price will likely snap back to before that potentially longer term move to the upside. Why do I think that? Because we near missed to that area, and we also near missed. Look how we pushed up. This is a very non-progressive move to the upside. This is a kind of structural move for a potential 1, 2, 3 to push lower to take out this near miss to here and this near miss to the sharp hook point before potentially that longer term move to the upside. Okay, so with that in mind, we have that impulse correction continuation within this structure, which if we just measure the impulses, okay, we've done more than enough now. We have that kind of, I talked previously about how we have this middle section here where the impulses are of a similar length within that. And if we measure the middle section itself and take it from the break, I'm doing this crudely and in a bit of a hurry, but that takes us up to where price rejected from. Okay, so the height of a middle section, often we break out by a similar amount, which just so happens to tap price into this area here, which we sold off aggressively from last time around. We know that if we sell off aggressively from an area, we'll likely do the same thing again, because it means there's likely a lot of liquidity there. I said previously about how if we push down, we would likely push down with the same level of aggression as we moved up here, and that's happened as well. As I say, I'm not psychic. I don't know. I don't claim to be psychic. I just know what I've seen, and I know what I've seen in the past, and what I've seen typically repeats itself over and over again. That's it. So what I'm going to be looking for today, I think this may be more likely than Sugar USD, simply because obviously we got more opening hours on pound dollar. Pound dollar is open for longer, but what we have here is potentially, what do we have? The same as with Sugar USD. We have a near miss to this high here. So we came up, we came down, we scooped back up again, we near missed to it again here, we came down, we came back up, we near missed to both of these areas. And to me, this just looks like what I've drawn, a potential middle section, a potential 1, 2, 3, to give us a bit more of a base and a bit more of a flatter structure before a possible push up to tap into this area. And if that happens, if we tap into the area, I'll be looking for the push down followed by the flag, and then I'll be looking to get short on the break of the flag, or within it, and I'll be able to manage it down to this low and for something in the region of 3 to 4%. And then, of course, if we take out these near misses that I was talking about, you can see that there is about 20% profit potential on the table. That is it, folks. I hope you're enjoying these videos, and I hope you're seeing how these patterns that we look for repeat themselves. And of course, if this shapes up, that correction would be proportionate. It would be about a 40% pullback almost to the preceding impulse. So that will be what we call a healthy pullback for the next leg to the downside for that potential impulse correction continuation. Thanks for watching, folks. Have a great day, and I'll speak to you again soon.